CTN.X, Credit Suisse First Boston Technology Index. Bellwether Apple, you got Adobe, you got Amazon, you got Broadcom, you've got Cisco and Dell. Those are beaten down. Now these are just all the names in the index MMTs, Qualcomm being one of the better ones in here. So I will tell MMT Rick to put Qualcomm on the list as the leader here in this particular one. This is a leader. It is a chip stock, but it's a leader in here that is got the least amount of risk with the best fundamentals right now. So you have a very mixed combinations. The other leader is Apple, which is broke 20% in bear market territory. So Google, which is broke, it was up $10 the other day. It's broke. They were all in great bull runs here. How about Bellwether IBM, everyone? How do you like that one? Now put that on your list there, MMT Rick, because this is one that we will buy at the right time. It also has a little bit of a dividend yield in there, and it would go perfect in there at the right time as the economy starts to improve. Big Blue IBM, and this particular one is going to be the least amount of risk with the highest risk reward ratio, meaning that the risk is going to be lower, but the rewards are going to be greater at certain times when it comes time to buying this name, IBM. So, what I would like to tell the MMTs as I get started right here, this is called it's a technology index. All of those bellwethers are in there. So, once again, unfortunately, back in calendar 2011, they were on sale with the European crises, and we had one of the better rallies right up here, but look at how it reversed. But then look at how it came right back to the tops. But look at here, 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks, 6 weeks, 7 weeks. That's 8 weeks in this bellwether sector. Technology is technology. Technology leads rallies. When technology doesn't do well, then the bull is going to be much weaker, just as I have covered today in many of them. We are broke 1, 2, 3, 4 weeks below the 10-week. That's the blue line. It's declining. You're below the 20-week. Now, when you have the great bull run over here, all of the weekly moving averages are going in the right direction, ascending in value, pointing up, and you rallied in the bellwether names. Yeah, you had Apple in there, and it was a contributing factor to the index, and so was IBM at one time. And there are other names in there, like the Qualcomms, and the Google is in here. So, basically, when we take a look at how broken this is, it has broken from its strong bull into a bear reversal. Does it mean it's totally in a bear market, the index? Not yet, because you have to come all the way back down here to the 200-week moving average. Should it get ugly going into year end, there's going to be a lot of volatility. The earnings are not as good. Most corporate publicly traded companies have guided their quarters down in this sector to try to meet the lower growth demand between 1.3% GDP and 2%. That's about what we have. And that's about what 2013 is going to look like. We got the election out of the way. We've got a lot of austerity in there. Austerity, they call it. Fiscal cliff. You want to name it. That's fine. What we will do, once again, is only trade the leadership out of here now. And that's what we do. So basically, if this continues to break lower, I'm below all the 10-week, the 20-week, the 50-week, and the 100-week. Technology has led the sell-off in the broader markets of this calendar 2000. And this is the whole year right here. Right here. This is a whole trend in there. Technology burned it. When it ran, everything else was going great. When we had the first calendar 2012, we consolidated down here at the lows, and we busted right back up. We're right here at the major support line 1, support line number 2. We break this lower trend line, which was the calendar 2012 weekly lows, we go much lower. And that would be support number 3, and then right above here, that if technology doesn't improve, if we go off the fiscal cliff, every one of these things can go into weekly sell signals. I will tell people that with the amount of selling that we've had in this 2 month period, we are reaching a point of where we're short term macro oversold in the broader index itself. So that means that the apples that are oversold, the IBM short term is oversold. There are a lot of names in the very short term within this reversal in this key sector. In the very key names, yes, they're oversold, but let me just tell people one thing. Any bounce up in any one of those individual names that I discuss that go up to resistance levels are going to sell into resistance. It's going to take a new weekly setup going into calendar year, November, December being the very best months for what? Technology, semiconductor, consumer, cyclicals, and things like that. Now, yes, it is a Christmas season. Yes, this is the time that markets rally, but they will not perform well as long as technology is getting crushed. I've got an all-out bulletin alert worldwide on this index. So we're going to leave it at that because this is the one that is the best gauge to the relevancy of where our economy is. Remember, technology leads the way. The consumers spend money for their gadgets in technology, let me tell you. So once again, we're at a critical mass of this time of the year. It's short term oversold. And any bounces up into resistance, you would exit and get short the market and make money on the reversals. Right now, this key area of support, if it breaks it, more selling will continue.